This one could quite possibly change the game. SoFi has officially launched SoFiUSD, a fully reserved US dollar stablecoin, issued not by a crypto startup, but by SoFi Bank, a federally regulated, FDIC-insured U.S. national bank. Guys, this is the first time a U.S. national bank has issued a stablecoin directly on a public blockchain. And yes, it went live on Ethereum. All right, guys, welcome back to the channel where we cover crypto, financial infrastructure, and where traditional finance is actually heading, not just the headlines. Today, we are breaking down SoFiUSD, how it works, and why this may signal the next phase of stablecoins moving inside the banking system. So here we go, guys. Today on Decrypt, right, there was a story just released that SoFi is launching their own stablecoin. So here are the very key facts, and I'm just going to break it down extremely factual right now. The issuer is SoFi Bank, right? Federally regulated bank. The regulator, right? This is OCC-regulated and FDIC-insured national bank. That's where SoFi fits in. It's backed 1-to-1 with US dollars, all held as cash reserves at the Federal Reserve. The blockchain they're using is Ethereum. The settlement is 24/7, near instant. This is not an algorithmic stablecoin. It's not backed by treasuries managed by a trust company. SoFiUSD is bank money that is tokenized. So every token is redeemable at par value immediately with no credit risk beyond the US banking system itself. So why is this different? Right? Most stablecoins live outside the banking perimeter. SoFiUSD lives inside of it. And this distinction really matters because the reserves sit directly at the Fed. Issuance is handled by a national bank. Compliance, reporting, and audits are all baked in. For institutions, this removes a massive barrier, which is counterparty risk. This is the kind of structure regulators, banks, and large enterprises have been signaling that they've wanted for years, and SoFi is delivering. So this stablecoin, SoFiUSD, is built on Ethereum. Yep, SoFi chose Ethereum. Ethereum, guys, man, Tom Lee, he knows something, right? He knows Ethereum. The big guys are choosing Ethereum. So SoFi chose them, and that choice was deliberate. Ethereum has become the dominant settlement layer for stablecoins, tokenized assets, and institutional on-chain finance. So by deploying on a permissionless public blockchain, SoFiUSD can settle transactions in minutes instead of days. It can operate 24/7 outside of normal banking hours, and that's huge, right? That is what people, transacting in crypto and stablecoins expect. They can also maintain their transparency and auditability since it's a public blockchain. This is traditional banking speed upgraded to internet speed. So guys, this is, let's call it infrastructure, not a typical consumer coin. And this is where it gets interesting. You can see that SoFi isn't positioning SoFiUSD as like another retail stablecoin. They are framing it as settlement infrastructure. This means banks, fintechs, and enterprise platforms could potentially use SoFiUSD as a back-end payment rail without building their own regulated issuance stack. And that is huge. Like, that is what is expensive. So if SoFi can offer this, other corporations and banks are going to jump on. There's even the possibility of a white labeled stablecoin built on SoFi's banking and compliance framework. That is also, like, some people don't even, like, once you start using these coins and these tokens at other banks and you think you're using, the JP Morgan coin or the Bank of America coin or whatever, some regional bank coin, it's white labeled. It could be possibly using SoFi's infrastructure built on Ethereum. So this if you pull back the covers and read into it, it's kind of less like a SoFi product and more like they're taking a stab at financial plumbing. The white label aspect, right? They wouldn't white label something that they want to keep internal. By white labeling it, they're setting it up for adoption outside of their own ecosystem. So what do we think this is going to be used for, and where are they headed? So at launch, according to the article, SoFiUSD is being primarily used for internal settlements and enterprise partner transactions. But it goes on to state that expansion plans could include international remittances, point of sale payments, fintech integrations across Galeo's network. So SoFi has said retail access is coming, pending operational rollout. So they do want to push this out to retail, which is, we need to see, once retail get involved, it's game over, right? When they open the doors to retail, the floodgates open, and they're going to do it in such a way where the typical person, the typical U.S. consumer, has no idea they're even using crypto rails on the back end. So guys, this isn't about flipping tokens. It's about rewiring the payments, and that has been the theme of the end of 25 going into 26, the rewiring and the transformation of the financial system. So at a macro level, right, if we just zoom out, take a 30,000 foot view, the launch from SoFi signals something bigger. Stablecoins are moving from the crypto edge into the core of regulated finance. And SoFiUSD has given everybody a blueprint. It's bank issued with Fed-backed reserves and public blockchain settlement. And if this model scales, stablecoins stop being crypto products and start becoming digital cash rails for the financial system. And that is a major shift. So, in conclusion here, guys, this story is not hype. It is a continued evolution about the changing structure of the financial system. SoFiUSD shows what stablecoins look like when regulators are involved. Again, we said we need regulations if we want the big boys involved. They're showing that banks are going to be issuers of stablecoins, and blockchains can handle the settlement. This convergence everyone's been talking about, and now it is rolling out. It seems like one day, one story after another, and the momentum is just building into 2026. So guys, if you want more breakdowns like this, where crypto meets real finance, make sure you hit like and subscribe to the channel, and drop me a comment. Is bank-issued stablecoin infrastructure the future, or does it defeat the original point of crypto? We'll see you in the next one.